Welcome back. Now the market's trying to get its mojo back, 30 points up on the Nifty. Once again, we're not quite back at the highs of the day, but nonetheless, this is quite an interesting move. And of course, it's the banks leading from the front. Axis Bank, 2.5% up. ITC is also actually looking quite smart, almost 1.5% up on that stock as well. Sandeep Wagle is with us. Let's get some more trading ideas in. Sandeep, it's all over the place. What are your stocks?
Afternoon, Surbi. I would go with a buy in a Bata, stop loss of 1130, target 1169, and a sell in a NMDC, stop loss 93, target 86.
Okay, thanks a lot, Sandeep, for those trading ideas. Interesting trade today, Mr. Hussain, has been on IDBI Bank. Rest of the PSU bank, I mean, the entire pack has struggled. But IDBI Bank is breaking out finally and crossing that price of open offer. Are you surprised by this move? What do you think the market could be sort of pricing in here, the big move that we're seeing?
See, Anuj, LIC coming into the bank is seen to be a very positive. And in fact, if you take a call on the recent increase in this all second or third run banks in the private sector, maybe like DCB Bank, Federal Bank, and IDFC Bank, people are again, taking this as a case of transformation from PSU bank to more, though LIC, if holding the stake, is also to be termed as a PSU bank only, but it's more a case of the classic case of turnaround with the managerial inputs coming in, and I won't be surprised to see the share moving up in line with the other banks. As I've said, in fact, all the south-based banks, if you take a call, probably that could be the only reason, and I won't be surprised to see the open offer not evoking that response of tendering by the shareholders in the buyback. So that could only be the reason, which can be connected to.
Okay. All right, Mr. Tulsi, and we'll wrap it up on that note for today then. Thanks very much, sir, for being with us and taking all the questions in. Well, on that note, just a quick pointer to add. Infosys, which had been languishing, it had lost the morning gains. Even that stock is now trying to turn around. And also on ICICI Bank, there is a big recovery underway. ICICI Bank just trying to get back into positive territory as well. So this is the shape of the market. Let's, as promised, extend this conversation and bring in Sandeep Shah, Associate Director at Motilal Oswal Private Wealth Management, who's joining us now. Sandeep, good afternoon, greetings of the season. Happy New Year to you. First simple question, if we are talking about at least, the first half of the year, run up to the budget, are you expecting more consolidation, or do you think the bulls will take control of this market?
Well, Happy New Year to you and to the entire team at CNBC and all the viewers. Clearly, the market looks like we're in a consolidation phase, and we have been there even though we've had two crises hit the market, ILFS, the NBFC liquidity crisis, and a very unfavorable election outcome. The market has actually held and probably made a durable bottom at 10,000. Net of any calamity happening. But pre-budget, clearly, I think maybe the upside could be 11,200. I think that, but the important, thing to look out for is that, while we keep talking about market levels and so on and so forth, I think, what is really important for investors is actually their own investor behavior as well as asset allocation. We have seen that whenever, even when there has been a very bad negative election outcome, which the market was not factoring in, like in 2003, when we saw the market correcting 10% on 2 consecutive days, we saw that the index actually went up 7 times from that level. So I think it would make sense for investors to actually look to buy the dips here, maybe spread their purchases out over till the election results. Because while there are some concerns in terms of domestic growth slowing down, especially in autos, and the NBFC liquidity hasn't totally blown over, though I think bulk of it is over now and most NBFCs are lending. At the same point of time, we are beginning to see some recovery in capital goods. So, while there are some concerns which have built up recently, there are also some new silver shoots or green shoots which are showing up in the economy.
Okay, by the way, the stock that's now batting for the bulls is HDFC Limited. Just pull out that stock once again intraday. And there also you're seeing quite a bit of buying, 1992 on that stock now. Last time it struggled somewhere around the 2000 mark. So it'll be interesting to see if we take that out. But just in the last 15 minutes of trade, in fact, it won't surprise me if now on the Nifty contribution plate, not the Nifty bank, the Nifty contribution plate, perhaps HDFC has moved to the #1 spot. it's free float based market cap, right? Which weight terminology, yes, it's overtaken ITC through the day. ITC was the top contributor. That honor is now with HDFC. So that's the intraday move that you're seeing. Though the mid caps have underperformed today. Once the advanced decline slightly weak. Sandeep, hi, good afternoon. There's a bit of a view in the market that perhaps the worst of the mid cap carnage is now out of the way, and this year you should be constructive about mid caps and small caps. Of course, this is a large space, so you'll have winners and losers. Do you agree that perhaps broader market could outperform after last year's underperformance?
I entirely agree with you, with the only caveat that I think mid caps and small caps, while they're looking extremely attractive, and I think if you remain focused on quality of business and promoter and don't compromise on the integrity of the promoters and the business model, I think there is a lot of serious money to be made. But the only difference is that I would actually extend my horizon to the next 3 to 5 years, because ultimately, equities as an asset class, you should look at it from a minimum 3-year time frame. And when you're looking at mid and small caps, you need to extend that a little further. Though it's quite possible that mid caps and small caps may actually outperform large caps, especially post-election results, because no matter what happens, whether you see a knee-jerk reaction or not, whether the election outcome is favorable or unfavorable, we know from history that in an election year, markets do well. And there's a lot of compelling logic for that and rationale for that. It's not just an empirical observation without any logic. It's just that investors tend to get sidelined. Everybody tends to worry and fret and worry about the worst possible outcome, and nobody likes to see their capital actually depreciate in a matter of months. So everybody wants to wait for the event. And then so guess what happens? Like the same thing that happened during the assembly election outcome. Even though the outcome was much worse, the market actually made a bottom fairly quickly and then started rallying. So having said that, you may wish to keep maybe say 10-20% cash if you wish to use for any knee-jerk opportunity, but I have rarely seen investors being able to capitalize on such opportunities. I think that when the bad news comes in, everybody starts worrying, and it's when the bad news is at its max is when the bottom happens. So yes, mid and small caps should do well. Whether they do well in the run-up to the general elections or not, I think they should more than catch up post-elections.
Okay, by the way, the market is putting on some more momentum and steam. We are now just about 20 points away from the highs of the morning. I mean, such has been the volatile nature of today's trading action. SBI also wants to be now, counted. Though you can't say the same about the rest of the PSU banking space. All other PSU banks, barring SBI, have been struggling today. That's a very sharp move on State Bank of India. But the others like your Union, Canara, Allahabad, that entire universe is still downbeat. But the banks really taking things higher today, Anuj.
Yeah, it will be interesting to see the contribution plate of Nifty Bank once again now. Wow. Yeah, just compare it to say 15 or 20 minutes back. I think, of course, Axis and HDFC Bank, the right line was dominated entirely by IndusInd. That has moved to the left. It's still not moved enough to perhaps contribute on the upside. That others that you're seeing 37 points. I think in the next 5-10 minutes, perhaps that will also change. But the Bank Nifty has broken out. There's absolutely no doubt about it over the last few days. This is the one index which has really been outperforming. And what's interesting is there's some other stock which bats for the Bank Nifty. On days it's, of course, ICICI Bank on most days has been doing it.
Yeah.
Today it's been Axis. I think HDFC Bank is sulking a bit, but otherwise it gets new leaders almost every day, and people are looking to buy any kind of dips on that particular index, and it ties in well with the fact that over the last few days there's been a genuine move from exporters into the the domestic economy facing stocks, even though the data may not still support it. Like you'll say that the last month's auto sales data didn't support the thesis that we're saying that perhaps we want to buy the domestic stock. Perhaps it was a 1 month blip, whatever it is, but at least from the market's point of view, a lot of these domestic stocks are being bought.
Absolutely, and a lot of the capital good companies that we're speaking to, a lot of these people are still saying that yes, there is more capex that's building in. Actually, Sandeep, on that note, I had a question for you. HDFC Bank, State Bank of India, ICICI Bank. Which of these three, or at least, the sectors that they represent, if you don't want to talk about stocks, which of these three parts of banking would you really load up in the portfolio, and which is the one that you'd relatively sort of pare down?
Well, a very difficult choice you've given me because, very frankly, while we have actually recommended clients, I have personally recommended clients to load up on, some of the corporate private sector banks. At the same point of time, on the one hand, you're talking about a retail-focused bank, which is a long-term structural growth story, which will continue to compound at maybe 18 to 20%. On the other hand, you have, you've mentioned a corporate private sector bank where from a cyclical 3-year perspective, you could see significant outperformance. And we're seeing in the sector that, slippages have been coming off, recoveries will start kicking in. You might see the impact of SR this quarter. And I think if you've got some of the best franchises in the PSU banking space, at some point of time, they will also start kicking in. So it's really a question of your risk profile and your return expectations. If you're not happy with 18 to 20%, which frankly I am and most of my clients are, we would stay put with stocks like that. But clearly for the next 2 to 3 years, the corporate-facing banks may actually outperform. Perhaps the private sector corporate-facing banks may lead the rally first, as they have been for the last few months. Maybe followed by the PSU corporate-facing banks, but only those which have a very, very strong franchise and very strong top-quality management and have size. While your traditional retail-focused banks, private sector banks might perhaps underperform in the perhaps next 1 or 2 years, but over the next 3 to 5 years, or let's say over the next 5 years, it will more than prove its mettle. So it's really a question of your time frame, your horizon, your risk appetite, and your return expectations. But having said that, I would look to be owning all of these 3 kinds of banks from a longer term perspective.
All right, Sandeep, we'll leave it there today. Thanks a lot for joining us. The market, by the way, many stocks now joining in. Divi's Labs, pull out that stock intraday. Of course, remember, it's now classified as a large cap stock, no longer a mid cap stock. So there's been quite a bit of fund buying, which is happening. So that is the one stock which is seeing quite a bit of buying. I'll tell you something, just pull out the Bank Nifty chart intraday once again, Surabhi. And what would be interesting is just we'll pull out the Nifty Banks chart intraday, or Nifty for that matter. If we were to sort of just, mask this area between say 2 p.m. to say 2:45 p.m. and see this as a chart and give you context that draw the missing piece. I think
nobody would have drawn this V over W or whatever it was.
The line is intact, but in between there's a sharp V that you're seeing. Drop, and I think the recovery has been sharper than the drop. Drop was over a period of, I think, 15 or 16 minutes. Recovery also over the same period, but slightly stronger than that.
Usually you do say that this is a market where extrapolation could be a little risky, but I think right now for this hour, the market has chosen to extrapolate whatever IndusInd Bank has come out and said in terms of loan growth, in terms of asset quality, and also in terms of just, quality leadership. You go out and provide whatever needs to be provided for and basically move on with life.
70 rupees move now on IndusInd Bank from the low point. I mean, this really has been some turnaround. On the stock, 1.8% higher is what you had. Now, it's not the first time it's done that. It's not the first time that a good quality blue chip would have done that. The key perhaps was in just identifying at what point did the risk reward get in your favor. Today, at least, that's how it panned out. On most days, that's how it pans out. But today, of course, it's a good reminder, 1605 now on the stock. Ashwini Gujral and Mitesh Thakkar, of course, with us with the BTST calls. Ashwini, you go first. Of course, the rally was sold, but the dip has been bought with double the quantum, I think. Your thoughts on index and, of course, stock calls now?
See, the point is, if you bought in the morning, probably your stops got hit. So point to point, I don't think it's useful to see that. What I have seen is that if you get a gap down, buying it is worthwhile. If you get a gap up, even selling it is now worthwhile. So I don't think I'm going to carry any long positions. Yes, if we do get some gap up, gap down, you take the other side, because this is a zone of resistance. Yes, we came back from the lows, etc. But that does not make today a bullish day, because the way we fell, you don't fall like that in a roaring bull market. Having said that, Sobha developers buy with a stop of 468, target of 490. BPCL is a sell with a stop of 345, target of 330. And NMDC is a sell with a stop of 93, target of 86.
Okay. Those are some calls that Ashwini has with him. Mitesh, what are you working with now?
So after a long time, I have one sell call. Gas Authority, I think, is breaking down on the intraday charts. The candlestick is quite negative. So STBT with a stop at 345 half for targets of 333, and a buy or BTST on RBL Bank with a stop at 572. Look for targets of 586.
Okay, that's Mitesh's call. By the way, don't lose sight of Havells. That's another stock where you've seen quite a bit of shorts over the last few days. And just look at that chart intraday now. I'm just seeing that play out. That's Havells stock. Almost 2% gains on that, and making higher moves right now. So looking quite interesting over there. Amrish, before we thank you, your thoughts on a couple of these stocks, Havells, if you've looked at that, and of course also I wanted your thoughts also on Yes Bank.
Havells I really don't track closely, but Yes Bank, I think with the announcement of the new CEO, we could see some upside. But then we should remember that once the new CEO comes in, he would start cleaning up. And I think the next 1 or 2 quarters could actually surprise on the negative side. So I would say that in case people are holding Yes Bank, utilize that up move post the announcement to at least book some profits.
Okay, all right, Amrish, thanks for that. Oh my God, that is a wow slippage number from IndusInd Bank. What Abhishek was telling us is the market was going with expectations of around 2,000 odd crores. They have had slippages of just about 800 crores. Of course, it is higher quarter on quarter, but it's not anywhere close to some of the estimates that were at least floating around on the street. That's really been the stock of the day, the stock of the afternoon, 2% up, and a massive revival on that one. By the way, beyond the index as well, there is a lot of flutter in the market. Some stocks that would be examples, of course, Anuj mentioned Havells. Some interesting moves on Motherson, Sumi. Pull out Strides Pharma as well. Strides has suddenly taken a big flight. It's days high on that stock. That's Motherson for you. It's done really well in the last 20 odd minutes of trade. That is Strides. And some of these life insurers, SBI Life, even ICICI Pru. Let me quickly check HDFC Life if there's some buying going on there as well. HDFC Standard Life, no, not as much. But ICICI Pru Life and SBI Life are the 2 life insurance stocks that are having a good afternoon as well. Abhimanyu Sofat of IIFL is joining in. Abhimanyu, it's an interesting session. But, we can't get enough of talking about IndusInd Bank and the way it's reacted after the numbers and the clarification on IL&FS. What would you do with the stock now?
So I think the results have been more in line with the expectation, with core earning growth of close to around 18%. I think the interesting thing is that if you look at the provisioning, last quarter the provisioning was around 54%, and that has come down by around 800 basis point or so. So if the provisioning was at the same level, then the profit number would have declined by around 12%. Having said that, I think the good thing for in terms of results was that the commercial vehicle, the vehicle segment sales as well as the non-vehicle segment, both did pretty well, close to around 30% kind of a growth. And the MCLR price hike also has helped the bank, in the last quarter. So the results are more or less as per expectation, with the beat on the bottom line number clearly because of lesser provisioning being done with regard to IL&FS as well as other accounts. In terms of loan book, I think it seems to me that their focus now is on the better quality paper. So that's one positive which is there. From current valuation perspective, we do see an upside in the stock. So continue to recommend a buy on the stock going forward as well.
Okay, fair enough. Abhimanyu, just your thoughts on the other pocket of the market that is slightly sort of trying to find its mojo back, and I'm talking about the auto space. For instance, after a big drubbing, iShares, for what it's worth, trying to hold on to positive. Even a stock like Tata Motors, for that matter, has now recently found some takers. What would you buy in auto?
So I think in the commercial vehicle side, clearly the last couple of months numbers are clearly something to worry about. Having said that, the interesting thing is that in case of Tata Motors, they are talking about close to around a $2.5 billion reduction in terms of cost, $500 million of that in terms of lower capex and overall more savings in terms of cost restructuring. If that does happen, then I think so for a guy who's an aggressive investor looking at from a 2 to 3 year perspective, it may be the right time to just start accumulating stocks like Tata Motors. I know it's not the consensus trade, but if they are successful in terms of reducing cost, clearly there are challenges. Brexit is a challenge, and what's happening on the Chinese market. So those are the two critical issues that they are facing. But with the new, all the vehicles coming on the 16 platforms over the next 2 years, I think that could be one non-consensus trade that one can look over next 2 year perspective.
Okay, interesting. By the way, there are a couple of decent movers in trade. I think we had, of course, Ashok Leyland management in the morning. After that, you had seen some move in Cholamandalam Finance. Shriram Transport is the one which is now making a move. In fact, at the highest point of the day on Shriram Transport Finance, pull out that stock intraday. Look at that, that's a big move happening. Now, through the day, we've been discussing the move in FMCG names. Marico is at the high point of trade right now, so that's also seen quite a bit of buying. Tata Motors, this is one stock where, of course, the dips are being bought, and today also we refer to the stock in the morning. There was one dip in the morning, one in the afternoon, both have been bought, so that's the other interesting one. And UPL as well is looking quite interesting. Mitesh, I wanted your thoughts on Tata Motors and how would you approach that stock now?
So we've been having a buy over there. The stock has actually now shown signs of a short-term bottom in place, and I'm looking at targets close to about 195. The first target is around 185, I think, but that will be crossed in 195, 196, which is where the stock had peaked out in November. For second week of November, I think those highs should be revisited. So I'd still be a buyer. 175 is now the support area, so try to buy it slowly because the stock has moved up in the last 2-3 days. But somebody wants to buy a fresh, any 2-3 point dip should be a good buying opportunity. Keep a stop below 175, and 195 should be your target.
Okay. Well, we just have about 3 odd minutes for the market to close out. So let's just get some final thoughts in. Abhimanyu, on the mid-cap side of the screen, any specific stock that you're really watching out for where you're expecting blockbuster earnings?
So one stock that we really like is Aarti Industries. The last quarter numbers are also pretty good, and going forward with the kind of contracts that the company has, we're looking at close to around a 30% CAGR earnings growth story over next 2 year period. And from that perspective, I think so the stock currently being available at around 20x FY20 looks quite attractive to us. So that is one stock that looks very good to us in the mid-cap space, where the risk reward looks quite favorable considering the earnings growth going forward.
Okay, all right. Gentlemen, just hold that thought. We are down to the last 2 or 2.5 minutes of trade. So let's close this out. And that graph is really, really an interesting one. This has not been one of those, once again, absolutely sideways, range-bound days. Range maybe, yes, Anuj, but then there was this sort of, afternoon scare that kind of came in.
Yeah, there was a bit of a scare. And I think need to notice the scare. Look, the dollar rupee as we speak is making fresh lows intraday. That's a big move happening in dollar rupee. I think there's Brent crude as well, and the market is close to the higher end of the recent range. Just pull out both dollar rupee and Brent crude. That's dollar rupee. I think 70.62. I think it was just 3 days back we were discussing 69.5.
Yeah.
From 69.5 to 70.5 been a move. I think bond yields have moved. And Brent crude, I think, is
almost
now
60.
inching to 60.
Yeah.
Now, an optimist would say that bull markets climb wall of worries. But let's be clear, this is no roaring bull market.
Yeah.
This is a market in which, ranges are being respected. And right now, once again, the markets move to the higher end of the range. So just want to, sit back a bit, perhaps take some spoils home, if you manage to buy that decline. And then see, if the market has a trigger to take out. Right now, sitting here, I don't see too many triggers to really take out this 10,950 sort of mark where, the market is struggling. I mean, if it happens, good, the market will give you perhaps follow through. But purely from the risk reward point of view, also this intraday swing on the bank Nifty is largely on account of IndusInd as well, because, that also turned around intraday. Anyway, let's talk about the stocks which moved. The stock of the day today, of course, has to be IndusInd Bank. Now, it's not the top gainer, but purely the way it recovered intraday. That way, 1% higher. Of course, the top gainer was Axis, up about 3%. ITC was up 2%. Tata Motors was up 2% as well. HDFC was up 2%. A lot of 2%ers today. UPL, Indiabulls Housing up about 1.5%. Kotak made a bit of a move towards the end. On the way down, though, there were some stocks which were really dragging the market. Yes Bank, in terms of stocks with some bit of weight, Yes Bank was down. Ultratech Cement was down a bit. Bharti Infratel finally seeing some profit taking. HPCL, BPCL both down. But suffice to say that among the top 10 losers, there's not a single one which really accounts for a lot in the Nifty, and that's why. And if you take a look at the Nifty advanced decline or the overall advanced decline, it was well in favor of the decline. At least the overall market, the advanced decline was in favor of the decliners. For the Nifty, it was 25-25, but the weight of the stocks going up obviously is higher, and that's why the Nifty is ending higher by about 48 points. But once again, the Bank Nifty outperforming 27,700 now and then.
Yeah, that one continues to climb higher and higher. On the mid-cap side, the index told you that it was a lackluster day, 30 points down on the mid-cap index. But as always, lots of action beneath the surface. Since the index is telling us it's a down day, let me start with the red side of the screen first. Group Finance and Bandhan Bank, there is no letting up here, is there? 8.5% gone again on Group, and Bandhan has lost about 5.5% as well today. Some of these metal stocks continue to be pretty weakish. On the ferrous side, you've got SAIL that's taken a knock, 4% lower. JSPL is also actually down, and that's more of a large cap. But anyway, coming back to some more names beyond the index, NMDC has been a weak name today, 3.5% lower. PSU banks, definitely not an exciting part of the market. So Union, Bank of India, Canara Bank, your entire list of losers pretty much is coming in from this pocket. Jet Airways, the turbulence continues, 1% gone from the stock today. And Dilip Buildcon, if I didn't mention that, should bring that stock up. Because of the ratings downgrade and that warning on sales, stocks lost about 5%. But now let me come to the winners, and it's been not a bad day. For instance, one pocket which was excited was, of course, a lot of the media stocks, print media stocks specifically. So we've seen DB Corp, Jagran Prakashan, HT Media, a lot of these go home with solid gains. HT Media actually 20% up, locked in circuit. Move on, then IDBI Bank having a good session for itself, 4.5% up. NIIT Tech is another name that you can keep in mind. Some buying on Motherson, which was quite evident. That really stood out as well. So these are some of the big movers and shakers on the upside. Largely speaking, a day of mixed trends. Also do keep an eye out on the likes of Shriram Transport and Ashok Leyland, because there seems to be some bottom fishing going on a stock like Leyland, 1.5% up on that one as well. On that note, let's just wind it up with final comments from our guests. What would you do with a stock like Ashok Leyland or even a Page Industries? And Abhimanyu, now I'm talking about the titans of last year that have fallen off quite badly in the last few months. Would you buy some of these names like Motherson, like Page, or like a Leyland?
So we would definitely look at Motherson because it's trading at a multiple around 13.5, 14. Even Ashok Leyland, I think so the risk reward is quite favorable at a price of around 96, 97. Considering that it's a cyclical industry, and I think the next 1 year is likely to be decent only for the industry. Probably after that, as the norms change, you could see downward revisions in terms of volumes for the sector. In terms of Page, I think so, yes, the stock has corrected by around 30%, but we still feel that the valuations are slightly expensive. So we would wait for a little bit of more correction on the valuation before we touch a company like Page or even something like Eicher Motors as well.
Okay. All right, Ashwini, having seen today's action, what would the advice be tomorrow, given that we're just 100 points away from what has been established as a pretty difficult top for the bulls to take out?
Well, we've been 100 points away for the last 4 months. So I don't think that matters, but the way these macros are beginning to shift, this could really impact the financials, because that was one of the reasons the financials went up. So my sense is that it's going to be volatile. You get gap downs, you buy, you get gap ups, you sell. I don't think you can quite now assume that every day will be up there, even on financials. They are looking strong, but there is profit booking as well, as we've seen with PSUs today, private banks yesterday. So be ready on both sides. I would like to watch out where does crude go from here and what happens to the rupee.
Okay, Mitesh, your call for tomorrow?
So I've been broadly maintaining a range-bound bias on the indices. I think that still continues, barring the bank Nifty, which obviously is clearly showing signs of an upward bias. We have had targets of 27,700, which has been met today, but the next target should be closer to about 2,800, and eventually the peak, which was in August, which is around 28,300, could also be tested. So the structure remains positive. In that sense, I think there could be a retest of earlier highs, but around those levels, I would expect very strong selling to emerge around 28,300. So for the time being, we're trading on the long side, trailing the stop losses, but looking at 28,000 and then 28,300 as two targets in the bank Nifty.
Okay. All right, gentlemen, we will wrap it up on that note then. Many thanks for taking us through market close today. We will catch you again with the action